A late December jaunt to Charlotte provided the opportunity for me to spend the day with a group of Honeywell's top executives where I sought to better understand the company's substantial pivot from giant industrial to a global leader in software empowering the industrial edge. This included an opportunity to sit down one on one with CEO Darius Adamczyk, where we talked about the economy, rising interest rates and inflation, the company's big investments in ESG, and more. However, before we jump into the interview with Darius, here are a few highlights from an insightful day at Honeywell Headquarters. So strap in and join me for the first episode of 2022 right here on Making Markets.
Honeywell, the story, it's bigger. And you work here talking to customers all the time, taking them through the history. How do you introduce Honeywell to the world?
And that's exactly it. I mean, Honeywell does so many things, it's sometimes a bit overwhelming. So this center allows us to showcase the entire portfolio in a way that's engaging and memorable, and really designed in a linear path, so each display represents a message or a theme. So it's a chapter along the way in the Honeywell story, and allows us to not only expose everyone to everything we do from buildings to aerospace to oil and gas, but do so in a way that flows in a story that is compelling.
What is the future that Honeywell is making, and what is the big way you're participating in the innovation in our basically our global economy?
That's right. Well, the tagline is our brand tagline, and it really stands for our focus on innovation. And what you see here on this display are just a few examples of the things that we've developed and invented over the years. Honeywell has a very long history of innovation, and not everybody realizes that, but we have been innovating and creating new things for our customers for over 100 years.
Like, what's kind of the fast way you get somebody that comes in here, and maybe they know Honeywell for thermostats, or maybe they know, because of your aviation control systems, but you're in all these things. How do you kind of get people acquainted?
And you bring up an excellent point. Honeywell is always evolving, so we really designed this space to be flexible and be updatable.
You're talking about buildings, you're talking about communities, you're talking about grids, you're talking about jet planes. I mean, these are the things that are putting off massive volumes of data, and you're kind of right at the heart of it.
That's right. And I think one of the things that makes Honeywell special and different from a lot of companies that are trying to do this is we have a long legacy that's based on control systems and based on sensors and based on physical connections to physical devices, whether it be a building or an industrial plant or an airplane. And because we have that tremendous installed base of control systems and sensors, we can now stream all that data back to Forge.
So this is our brand ribbon, where we can showcase some case study examples of our technologies out there in the field. The way that this particular display works is you can take the model that's on the display and place it on the sticker, and this will activate a video testimonial. And this example is the Mark Wahlberg example about his private jet, which Honeywell is on board enabling.
I really think the world is at a tipping point in terms of the technology and the data and the software all coming together and being ready to be consumed, and Honeywell is leading the way in that effort, and we're really proud of it.
We really try to focus on industry. So you'll notice in the center in particular, we don't want to kind of organize things by how Honeywell is structured. We organize by industry. So in our immersive experience room, we can actually immerse customers in their own environment, and we can actually show the Honeywell solutions working within those space, showing them from end to end everything that Honeywell does.
Oh, my name.
Yep, we've got your name and lights here,
love
personalized
it.
just
I love
for
it.
you. And in this space, we have the ability to immerse someone, customer, or any group in their own environment. So we can customize signage, make them feel at home. We have a quick welcome video that we play that really brings to life the space and sets the tone for what we do in here. And just to give you a little bit of a preview, we have an example here, which is Target. So if
the big retailer, Target.
Exactly,
okay.
Target. If Target were coming in for the day and that was our big customer focus, we can show here on the wall just exactly what they would think of if you're in a Target store. If you want to take a look at this screen, this will show you the transition from the warehouse setting to the retail floor at a Target. And here you can queue up additional content. So if we wanted to show videos or an actual live demonstration, we could actually pull that up in the screen in the room. And unlike a VR experience where it's very individual, the room allows us to have it be a group experience, so everyone gets that same experience and we can talk a little bit more, develop the relationship.
I think this next decade is going to be a time for companies like yours.
I
to truly be recognized.
fully agree. I think we're positioned well. We're already doing a tremendous amount in this area, and we're just so excited about what's to come over the next decade.
This is the Making Markets podcast, brought to you by Futurum Research. We bring you top executives from the world's most exciting technology companies, bridging the gap between strategy, markets, innovation, and the companies featured on the show. The Making Markets podcast is for information and entertainment purposes only. Please do not take anything reflected in this show as investment advice. Now, your host, Principal Analyst and founding partner of Futurum Research, Daniel Newman.
Darius Adamczyk, welcome to Making Markets.
Thank you. Pleasure to be here.
Yeah, it's really great to have you back. Haven't had a chance to sit down since our 6.5 Summit this summer, where you joined us, and that was a really fun conversation. I think as we come to the end of the year, we all had a little bit of a different interpretation of where we would be right now. And for anyone out there, it is the very end of 2021, right before break. Hopefully all of us are going to be taking a little time off here. But thanks so much for sitting down. I'd love to get your take, just kind of on 2021 at a glance, how you're seeing it for Honeywell, kind of what you're seeing in the macro economy, and we can dig in a little further. But just, what a big year for you guys and so many accomplishments.
Well, thank you. And it's certainly 2021 turned out a little bit different than we expected. And whether it's sort of the dynamic growth that was probably faster than we expected, on the positive, our markets coming back in a very strong way. Those are the good things. The economy is booming right now. But we also had some challenges. I mean, whether it's the supply chain challenges we had to deal with, whether it's inflationary pressures, whether it's some of the labor shortages, freight and logistics challenges. So it certainly didn't pan out exactly how we would have thought. I mean, we thought that at the end of 2020, we certainly would have thought, kind of demand coming back, which it has, but probably even more pronounced than we expected. What's a bit different is some of the challenges, which is, the supply chain challenges, whether especially in the area of semiconductors and so on. So it's definitely turned out much different than we expected. And I think probably sort of the waves of COVID that really have hit us, because we kind of had, the first wave that kind of ended in, March, April of 2021 after people started getting vaccinated. We had the Delta wave, and now we're unfortunately starting this Omicron wave, but hopefully it's the very last one we're going to see.
Yeah, and it is a big, very persistent, fast-spreading, virulent wave. I think we're still waiting for evidence. How much is this going to impact? But we're seeing pullback. I just got some alerts even this morning. CES is a big event in the tech space. Companies like Amazon, a bunch of the tech media, a bunch of social companies like Meta and Twitter, all pulling out. So here we are again, 2 years later, and we're having 2020 nightmares. But at the same time, I got on a plane to come out and visit you yesterday. The airport was absolutely bustling, which is good for Honeywell. The planes are flying. The planes are full. Uber lines are longer. Restaurants are packed. So you're seeing a lot of encouraging data too. And so I think we're in this sort of inflection point where what happens next is going to be really interesting.
Yeah, no, that's absolutely right. And I think that the reality is that COVID is going to be endemic, and I think it's just something that we're going to have to learn to live with. The good news is that we have more medical tools to deal with, whether it's vaccinations, the antiviral pills that are out there, and I think vaccinations are going to become an annual event. And we're just going to learn to live with it. We learned to live with the flu. We've done that, and we've managed it. The good news on some of the early data points on Omicron, at least from what we're seeing in South Africa, is that it doesn't seem to be as severe a disease as some of the other waves, so hopefully that will come. And my view is that this wave will probably be a bit more pronounced in terms of the number of people that do get infected, but it probably won't be anywhere near severe, and also should subside very, very quickly. For us, we are looking forward to the day where this is more behind us. But I think there are good signs everywhere. You talked about aerospace. I mean, you see the tremendous pent-up demand for the consumer to travel again. I mean, airports are absolutely packed. But think about that in the context of the business traveler. I mean, there's that same level of demand that's pent up out there, that going out to see your facilities, your colleagues overseas, your customers overseas, interacting in person again. I'd argue there is as much, if not more, of that pent-up demand. It's really going to hit as soon as we kind of get through this hopefully this very last wave that we're going to see.
I think cautious optimism is the word, at least for how I feel about it. As an analyst, I'm kind of weighing in both the sensationalism of some of the media stories with the data, but again, too many armchair epidemiologists, so I'm listening and I'm letting the experts, just like myself on tech or Honeywell on the industrial markets, we need to make sure we all stay in our lane a little bit, and let's let this all play out. But speaking of all things playing out, you know, I'd love to get some of those macro perspectives from you. You mentioned a series of different things that are impacting the economy right now, and Honeywell is such a beacon, is a bellwether of so many of these things. You mentioned, you know, the supply chain. You mentioned inflation. You mentioned, you know, you talked a little bit about climate and some of the things that are going on there. But just starting with the supply chain, well, you know, you're not purely in semiconductors. Much of what you do is hyper-dependent upon them. Kind of what are you seeing on the supply chain? Are we seeing some relief through the lens of Honeywell?
Yeah, we are seeing some promising, you know, for us, as we look at our 2022 needs, we have something like 90% of the supply that we need committed for our 22, what we think our 22 demand will look like. So that's promising. That's actually extraordinary. That's the good news, but we still have that additional 10% we've got to work on. But I actually went a little bit of a better place than I thought we would be at this point, so I think that that's very encouraging from a Honeywell perspective. We're getting ahead of it, and we do think that some of these challenges will subside as we get deeper into 2022. You know, the economies remain robust. I am optimistic. Both U.S., Europe, China, all these economies look poised for continued growth in 22, and I think particularly as COVID subsides, that growth will probably accelerate. You know, we are a bit concerned about inflation, and you know, we're supportive of some of the tapering that's taking place, interest rates. You know, the thing that we have to be very cautious about is that we don't want to see the other side of the roller coaster, meaning that inflation goes up, and you know, we have to be very thoughtful about not tapering that down too fast, too hard, you know, because it's, you know, we don't want to see a recessionary environment either. There's nothing that says that will happen, but I have some level of concern that, you know, if we go too far too fast, that we could see the other side, and hopefully that won't happen. But, you know, so far so good. I mean, our demand profile that we saw in Q2, Q3, and Q4 looks extraordinarily strong, and things look optimistic for us for next year.
Yeah, Powell's comments at the last Fed meeting, I think, took a lot of the uncertainty out. It seems that, to your point, that the market is pretty committed, the leadership, the Fed is pretty committed to doing things at a pace that doesn't pop the balloon, per se. But I think we are all nervous with the amount of debt, with some of the you know, programs and some of the bills that are in Congress, if they were to pass, trillions of dollars for these programs, and interest rates, of course, if they go up, it's not only going to affect consumers that are buying goods, it's going to affect businesses that are buying goods, but moreover, our government has quite a bit of debt that they're going to have to situate.
Sure. You know, I mean, you know, obviously to service debt, it's going to get more expensive. That's the drawback. You know, I think for us, you know, because we are, you know, our balance sheet is strong, and to some extent from an M&A perspective, I mean, we probably welcome slightly higher interest rates because, you know, we have plenty of capacity, and we'll probably cool off the M&A environment a little bit. So that's probably not the worst thing, at least from a Honeywell perspective. That others may disagree from that point of view. So we're encouraged by some of the steps that are being taken. We are very supportive of gradual adjustments upwards of the rates, and I think that's going to have the right impact on the global, not just the U.S., but really potentially the global economies. Although, you know, different countries are in very different places in terms of what they're doing, and China is probably on the other side of this thing. So, but overall, I think 22, especially from the markets that we play in, whether it's aviation, whether it's energy, which is, automation, controls, buildings, and, we talk about buildings, everybody thinks we're talking about office buildings, but stadiums are buildings, data centers are buildings, hospitals are buildings, daycare centers are buildings. So we think the utilization of buildings overall is going to improve. And then you combine that with some of our healthy building solutions, because I think people are always going to be much more aware of the air they're breathed, the environment that they're in, social distancing, and so on. I think that will stay with us for a number of years, and I think those solutions that we brought to the world will help people re-assimilate back into various types of buildings.
Yeah, I'm glad you brought that specific example up, because I was going to ask you, from a Honeywell perspective, you have a very significant building technologies play. You've partnered with some of the world's largest IT firms to really bring the IT/OT story together. As we do return to the office with this endemic, disease that has continued to sort of start-stop, you would say the reopening of things like this beautiful headquarters that we're sitting in right now. I have to imagine so many customers that you're either indirectly or directly interfacing are thinking about exactly that, Darius. They're thinking about, okay, we want to bring it back, we want to bring it back safely, but we want to use data-driven, technologically advanced offerings to be able to tell our employees and those that are governing that we're thinking about this, we're thinking about the quality of the air, we're not just reopening our doors, but we're going to make it safe, we're going to make people comfortable, we're going to make stadiums, we're going to fill them up and keep people safe, we're going to keep the malls full with people spending money but not catching disease. I mean, your technology really is underpinning this.
Absolutely, and the key is to not just have the technology. I mean, we're in our new headquarters, and we have all our latest and greatest technologies, including air treatment technology, ultraviolet light, which really removes a lot of the pathogens out of the air. But the key there is something else, is making the occupants aware of what is going on in their environment, what's the air quality, what's the temperature, what's the social distance. We bought another company called Sign right around this time a year ago, which actually provides mobile applications which are really designed for the occupant, and to provide things like air quality, social distancing, all these notices, and all of our employees here at the headquarters actually have that on their phone, so they can look up in real time what's going on in their environment. What's the air quality, what's the ppm measurement. And we think that that's going to become really critically important as people start to return to sort of, normal activities. That awareness about, how safe is this environment is not going to go away for a while.
Looks a little bit like when you're walking around, I think it's New York, and you see the grade outside of every restaurant, and you get a grade. We're going to digitalize that. It's going to be on your phone or on your device, and it's going to tell you, is my environment that I'm entering safe? And I think that's a huge opportunity. Sign, by the way, had a chance to use it this morning, checking in.
Terrific.
I did enjoy that experience. It worked seamlessly. And so, again, a lot of the technological innovation or investments, both in organic and organic, sometimes I think gets missed. And when I started making markets, a big part of my storyline was just that there's so much more to these companies than kind of the sound bites that end up in most of the business tech media or the business media. And I'm like, I want to get a layer deeper. So when we met at 6.5, we kind of had this story about Honeywell's transition. Now we're another 6 months later. We've identified it's been an interesting year. We still have a lot of macroeconomic issues, but your moves forward, whether that's been a series of acquisitions like Sparta, Healthcare Technologies, Sign, you're continuing to make investments. Forge, I'm seeing more commercials on CNBC than ever before. The story's transition. Do you think the market is starting to fully appreciate? Because I still look at your stock, and I'll end it here. I say, sometimes I feel like it's pure value. The way people assess it and value it, it's all margin-driven and dividend-driven. And then I look at it, and I'm like, but there's so much innovation going on. Are people appreciating that?
Yeah, no, I think that's a very, very astute point on your part, right? Because, we are continuously investing in future technologies, but we also want to provide a compelling return for today's shareholders. And we've done that. I think we've got a very demonstrated track record of, growth and margin expansion. We've done that for decades, and if anything, we've accelerated our growth. But we also want to future-proof the business. So whether it's things like our sustainable technologies portfolio, which really will enable the world to have a much greener planet, whether it's our Forge offerings, our software offerings, whether it's quantum computing, whether it's our play in UAVs and UAMs, which is really the future of aviation. I think what's underappreciated, people want instant gratification. Well, how much is it going to get me this year? Well, it's actually going to get you a negative R&D investment. But the point is that if you don't seed and if you don't plant these future technologies, then the person who runs this business a decade from now won't have a viable enterprise. And when you are a Honeywell shareholder, you get two, or maybe three primary things. You get a company that competes and innovates and is a leader in just about every industry that we play in, and we do very, very well in those industries. Number two is we have a responsibility to future-proof the business as well. And I just gave you some examples about how we're thinking about the future and how we're also investing in playing these technologies. And three is, and I think we're very careful about how we deploy capital. I mean, we are, we think that we're good stewards of our investors' capital. And, I think the U.S. Digital Design acquisition, which we just completed a couple of weeks ago, is a great example. It's a highly ESG-oriented acquisition. Basically, it allows first responders to actually arrive at a building an order of magnitude faster than through current technologies. It's a high-growth business. It fits our building technologies portfolio, and we bought it at a price point which was fair. We're going to get an ROI of 25% in year 5, and so it's still possible to buy good businesses at a value point which is attractive. And that's sort of the overall investment thesis for Honeywell, is you get all three of these elements. Careful deployers of capital and do it in a way that our investors look at it. Future-proofing of new innovation technologies that may not generate much today, but they will in the future. And then we play and we win and we innovate in the markets we play in today to give you a compelling return.
Yeah, and the diversification has been significant. And I'm going to come back because you talked about ESG, and I'm going to kind of want to end on that. So hold the ESG thoughts. I got two little in-betweeners here. The first is you mentioned quantum, and so there's been a lot of publications out there about the Quantinuum spin-off, which was Honeywell Quantum and CQC, and Honeywell is going to be the #1 backer. Seen quite a bit of this in the market lately. I call it I believe it's very intelligent engineering to unlock value in disruptive innovation. You saw, Dell did it with VMware when they couldn't get the value inside of the Dell. They unlocked it. You just saw Intel did this with their autonomous driving unit with Mobileye. And I felt that Honeywell followed a similar path where you have a lot of value, but because Honeywell's so big, so diverse, and quantum was a small revenue component, it maybe wasn't getting full credit for just how much you guys are actually contributing and competing into that space. Anything else to that decision, to that move? Because, like I said, I'm very excited about it. It looks very good. Tony's doing a great job, and seeing Honeywell hang on to that big share, to me, says you're not bearish on it. You just wanted to make sure it got out in front, where it might get lost a little bit in a company so large.
No, I think that's absolutely right. We love this combination. I mean, we think that the analogy here is think about some of the leading hardware players in the personal computer market in the early 80s. So whether you want to talk about IBM or Compaq or one of those players, combining with a company like Microsoft and then really merging into one. I mean, right now, Honeywell has the leading hardware in the world in terms of quantum computing. CQC has the leading software platform in terms of quantum computing, and not just for Honeywell, but really the whole quantum computing world. And we are keeping CQC at an arm's length from Honeywell because it's not sort of just designed to work on Honeywell hardware, but really any other hardware, and that's the way we're going to keep it. There's going to be a bit of a separation. But we're thrilled by the combination because it really creates a leading company in the world today in the quantum computing space. And yes, in terms of, liberating some of that value, because you can pick up you know, what's really should be attractive to investors is you can pick up a very pronounced play in quantum computing at an industrial type of multiple.
Absolutely.
You know, so I don't think that Honeywell has a lot of value attached to it because we have continuum within it. So obviously we're thinking about ways as to how we liberate that value and potentially have it be a bit more exposed to investors.
Yeah. And I've put my thoughts out there. I could definitely see a public offering. I'm not going to ask you to comment on that. That wouldn't be appropriate. But for people who want to invest, there's very few choices. And again, mostly it's been locked up in Honeywell, locked up in Google, locked up in IBM. And so if you believe in quantum and you want to put some of your investment behind it, it hasn't really been broadly available. And this, if it does go and becomes something in the public market, when that happens, investors will have a chance to say, look, it's a company I believe in, partner with a company. And by the way, I do think it's worth really pronouncing the fact that the arm's length between hardware and software is going to be huge, because we don't know in the end. What we do know is that hardware and infrastructure continuously evolves. But just like semiconductors and software, the winners are the ones that have the software that can run on any chip. And the easier it is to run it from system to system, the more opportunity and growth that exists there. Let's flip to the ESG thing and talk about that a little bit. That to me is just a huge opportunity. I've seen some data come out that Honeywell has made somewhere around 90% improvements in its own. And what I say is, it seems like Honeywell is a bit of it's its own biggest client in many of its innovation efforts. And this is one great example of it. First, maybe just broadly, what's driving ESG as such a priority for Honeywell?
Because ESG is embedded in so many things that we do across the business. And, just to maybe tee up something else, I mean, every year we issue our ESG sustainability report, that comes out every September. And I encourage all of our investors to at least flip through that. It's about a 70, 80-page document, which comprehensively breaks down what we do and how we do it on all elements of ESG, the E, the S, and the G. And I think we have a track record, frankly, that's second to none. And I think that you see that, more than 50% of our R&D spend is on ESG-oriented solutions. And as percent of the total, ESG revenue is going to continue to grow. And I'll just point to a couple of specific examples. I mean, I talked about U.S. Digital Designs. I mean, that is a very ESG-oriented company. I mean, saving people's lives is a very big ESG thing. Probably the one element that maybe doesn't get talked about as much as I think it should. Now, this is maybe a little bit away from digitization and maybe sort of, where we talked, but probably our fastest growing business at the moment, it used to be Intelligrated, which, by the way, is still growing extraordinarily fast, but actually one that I think going to bet on is going to grow even faster is our sustainability technology solutions business, which really contains all the technologies that are going to be relevant in the new energy infrastructure. So whether it be green fuels, whether it be plastics recycling, whether it be carbon capture, whether it be hydrogen, fuel cell batteries, all of those technologies are contained in that business. And we've had some great wins with JGC to name one, of our partnership with United Airline being another, our partnership with Saker in Europe for plastics recycling. That business is going to exhibit exponential-like growth, and I think can be Honeywell, and specifically our UOP, can be transformational in terms of the role that they're going to play in taking the energy segment from what it was to what it will be in the future. And as you know, there's a lot of commitments around zero carbon emissions in 2040, 2050. We can be that bridge with our technology portfolio. It's available today, so this is not futuristic. A lot of this is available today. We can help a lot of these companies really transform to who they will be in the future.
Yeah, there's a massive energy transition that's going on around the world, every industry. And as a company that is so industry focused, not just industrial, but industry, like you have such a tremendous track record in areas, manufacturing and aerospace. We've talked about a lot of these. Every one of these industries is under a different subset of pressures. And so I'm really glad you mentioned that kind of the say-do is something I hear a lot, or that sort of posturing that's gone on versus execution. because I feel like over the last few years we've gotten a lot of posturing, and I've tracked primarily tech. And so as like with Honeywell, I've been watching your technology transformation. But almost every major company in technology has made some level of a commitment, saying by 20X, 30, 35, 40, they're going to achieve carbon neutral, or they're going to be 90% sustainable goods, or they're going to be using only recycled fuels, or they're only going to be sustainable labor. There's just a lot of promises being made. And you and I had a little time to talk off the record, and I liked one of the things you said along the lines of 2030 versus 2050. I mean, you have things being committed that will be 2, 3, 4 CEOs from now for some of these companies, maybe more. Right. And so it's kind of easy to say it, but the doing is complicated. And you mentioned you have these technologies that exist. You guys have probably one of the most comprehensive data sets of environmental sensor data in the world. You have macros on the utilization of materials that are required for companies. This is very real and tangible for the tech industry, which is going to be one of the most accountable because they're making the biggest promises. They want to be on the front end of this. Honeywell's not really just going to be a partner. From what I understand, they're really going to need a company with your capabilities to be able to meet the promises they're making to their stakeholders.
Well, that's exactly right. And I talked about some of the technologies that we have today that can make that reality. And there are two sides to this. The first one is, how do you remediate? How do you become less hydrocarbon intensive? That's a big body of work and a lot of investment and transition and transformation has to take place there. But there's another element that's just as important, which is measurement. You also have to be able to prove the fact that you are not as carbon intensive as you were in the past, and you have to have sensors and systems and software to be able to do that. And just to give you an example, I mean, we are currently in the process of instrumenting one of our own facilities, that happens to be a manufacturing facility in this case, but to really measure the emissions in real time so as we implement technologies to minimize those emissions or eliminate those emissions, we can actually prove that. We can prove that, and we can measure it in real time to say, okay, here's what the carbon emissions were, and here's what they are after the applications of a given technology. We think that that's really important because today it's mostly, math models and applications and so on, and I think that's helpful. But until we develop a system of record to actually track carbon emissions, I don't know that we're going to have a fully compliant infrastructure in the industry.
I feel like the word from everything you just said is really accountability. There's a big accountability opportunity that Honeywell can help these companies to deliver on, and that's something I'll definitely be watching closely. But the sustainability story is very, very compelling. Last question. There seems to be a bit of a debate in the markets right now about the large conglomerate versus the sort of systemic breaking of these companies. You saw it with GE years ago, but now you're seeing some recent ones with Johnson & Johnson, with Bosch. Obviously, Honeywell, it seems much of your stuff is integrated, but you're also sort of perceived as a conglomerate. Right. I'd just love to get your take on sort of what you see the forces are here and why Honeywell is currently better positioned in its current condition.
Right. Yeah, maybe a couple of answers. So the first one is we don't view ourselves as a conglomerate. I think when people think about Honeywell, they think it's a conglomerate. But there is a technology theme that's very, very common. I mean, our industrial automation business, our aerospace business, which is, the heart of it is avionics. Well, what's avionics? It's you control the aircraft through the avionics platform. Same thing as warehouse automation, our SPS business, building technologies. We're the preeminent player in building controls. I mean, that's what we do. So. But I can see why people would say that. It's a natural view because we don't really have that as the central theme. We don't have control and automation as the central theme. We have the end markets as a central theme. We talk about buildings, but we could be named Honeywell Control and Automation. It would fit.
Yeah, I think it makes sense. I think the moral of your answer there is that conglomerate would not be an appropriate word to utilize, and although the market may sometimes misinterpret it because of the diversity of your business, that everything has common threads that tie it together, create value at scale, which is the difference between a conglomerate and a diversified enterprise that's building things across many industries. Darius Adamczyk, thank you so much for joining me today on Making Markets.
Thank you.
Thank you for tuning in to Making Markets. Enjoy what you heard? Please subscribe to get every episode on your favorite podcast platform. You can also watch us on the web at futurumresearch.com/makingmarkets. Until next time, this is Making Markets, your essential show for market news, analysis, and commentary on today's most innovative tech companies.